Boys and girls, ladies and gentlemen, recently everybody talk about gold and the reaction is always, wow, do da. No, people are making money. Gold prices are running up again to historical high that was last seen in 2011 and you should be happy. So today, due to many requests, we are doing this very special video, okay, number one on how to estimate the immediate top of the spot gold prices, which is going to happen, well, I believe early August, all right? Then number two, most important thing, after the consolidation, we are looking for gold prices to go even higher, but how are you going to double up your profit, okay? Which means if you make a certain amount of money in spot gold prices, what should you do in some additional instrument to double up or to maximize your profit by not leaving the gold instrument. All right. Today, this is a very special lesson and a topic which we want all of you to watch from front to back. Stay tuned with us, and we hope this will benefit you. I'll be right back. Hi there. Welcome back to the DW World Equity Time. And today, I'm going to share with you a very special topic. It's about gold trading and actually how to double your profit when the gold prices up run. All right, recently a lot of people have been very excited after they have seen the spot gold prices breaking up the new historical high that was last seen in 2011. And if you know what I meant by comparing on the monthly chart prices, okay, let's take a look here. Okay, this is the month chart. Okay, if you have a chart like this, you can compare the last time when spot gold prices was seen at a high of $1,920 per ounce. That was sometime in September 2011. That's exactly about 9 years ago. And recently, all right, moving into the end of July, we have seen the spot gold prices moving up to a high of $1,981 per ounce, which you can see around here, right? That's an open, high, low, close. So that is on the spot gold prices. And today we're going to talk about nothing except spot gold prices, right? From this month chart, let us move back into the day chart, and I want to show you something very spectacular. All right, if you would have followed our Chinese video, which was put up on a previous Saturday, all right, we do covered on a very simple technique regarding how to spot the changing of momentums and the crossing of exponential moving average for all the traders to find the signal, all right, to enter into the market on uptrend or a downtrend. Right, let us look at these current prices today, all right, at trading at $1,954 per ounce. By the way, I have to tell you that today is the date 29 July, is a Wednesday, okay, 29 July year 2020 is a Wednesday. By the time you watch this video clip, probably it's going to be about 3 or 5 days ahead of this date, all right? So, but it won't be too far away, all right? Regardless, you're watching this video in early August or maybe even later. But if you time back and compare what I'm going to make a prediction today and on how we analyze the market, I believe you have got a lot of pointers that you are able to pick up from here. Okay, now what we are going to talk about is the most interesting question people keep asking: how high can a gold prices go up to? Some people say 2,300, some people say $3,000, some people say 3,500, or even 5,000 US dollars. All right, that is on the mid to long term. It's going to be sometime next year, 2021 or even 2022. And I'm not going to talk about that far. I just want to let you know what is the nearest immediate target that you could be looking at before you exit your profit and take a breather before you start to go back in again market to pick a low. All right, so the topic today, point number one, is where is the estimated target top in spot gold prices? Point number one. Okay, If we look at earlier, all right, comparing the month chart, sometime in September year 2011, the high was $1,920. All right, one of the fastest method to know that after 9 years has passed, and when the market now is moving to the next high, where is the target top? A very simple method is to add another 5% on top of where the top was formed in the year 2011, which means the last top was 1,920. All right, on this price you add another 5%, and what you do is 1920 times 1.05. Okay, times 1.05. That will add up 5%, and this targeted top will come in at a price of $2,016 per ounce, 2016. All right, this is the first way to estimate the immediate top that the market is likely going to hit, okay, in this couple 1 or 2 weeks before it begins to recede. Now, the second way on how we are going to estimate the target top is by a proprietary method that I found 20 years ago. Okay, I call it the power wave. Okay, it's very simple. Look at this. Okay, let's go back into the month chart. All right, taking this as a bottom, all right, the bottom which was formed in December 2015. All right, the bottom price is somewhere at $1,030. Okay, 1030. Okay, the first wave up we call the wave A. Okay, from this bottom to the top. All right, the top is $1,370, and the whole range of upward movement was about $300 range, $300. All right, on the wave A. Okay, after the wave A, we have the wave B, which is here. So the whole wave C here, okay, we call it the C1. Okay, we call it the C1, C2, and the C3. Okay, the whole up wave run up as a C wave, estimated will be 3 times on the range of wave A. So earlier part we are talking about the wave A running up here was about $300. So wave B was a down wave, and the wave C run up, okay, regardless of how long the period that it could have taken, it's going to be about $900 upward range. Okay, starting from the bottom of wave B. So in this bottom, all right, which was somewhere at about $1,120. If you add up another $900, okay, $900, which is 3 times the wave A, the top is going to be about $2,030 to $2,040, 2030 or 2040. All right, this is the second way of estimating the target top by wave count. So if we compare the first way of estimating the top earlier, and that was $2,016 per ounce, and this second method actually gives us an estimated top at about 2030, and they are pretty close. So in the next 1 or 2 weeks, if we happen to see spot gold prices coming up to this level, anywhere 2020 to 2040, I think long traders should exit, take a breather, wait for the sideways correction before you start to enter again for the bottom. Okay, these are the 2 ways up. All right, today's second topic is still about spot gold prices. Okay, I'm going to show you a very interesting instrument on how you can double up your profit by trading spot gold prices. All right, let's take a look at this. The most recent run up on spot gold prices based on a day chart. Okay, based on a day chart. Now I move back to a day chart. It is starting from here. And the date was the 5th of June, or we call it the early June. Okay, from the bottom, we've seen the day chart moving up, okay, in wave form. All right, and the bottom was $1,670 per ounce, going up to the top, which was formed last night at $1,980. So on these spot gold prices, let's assume, okay, that you have a position at the bottom to the top. The full range, okay, if you calculate, it is about 18% prices of ascension. 18%. All right, of course, you may not have captured the bottom and right at the top, but we are just doing an analysis that the full upwave range of the recent run-up was 18%, 1/8. Now, this is the most important part of today's video. I'm going to show you, okay, how you can double up your profit in spot gold prices by not restricting yourself to just 18% growth. Take a look at this UGL. All right, I want you to go to Yahoo Finance or anywhere. Go to Google search engine and just key in ProShares Ultra Gold, or the symbol is UGL, trading in New York Stock Exchange. This is the ETF. All right, this is a ProShares ETF that actually move on a 2 times leverage. Okay, what does that mean? That means this ETF track exactly as what spot gold prices do. But whatever range of spot gold prices moving up, this UGL will move 2 times. All right, that's how you actually create it of a profit. But not forgetting, if you happen to go into this UGL and buy, when the market happens to come down, you will lose 2 times as well. So you have to time your market entry very, very carefully. Okay, let us take a look by going back to the chart. Okay, 18% for the spot gold prices. Let us take a look now at the UGL. All right, be patient, and here we go. UGL ETF, listed and trading in NYSE. All right, starting from the same date on the 5th of June, all right, as we can see here, right, the bottom was 56 US dollars, okay, on this index, and based on last night high, all right, on the spot gold prices, last night high was $1,980, but UGL, last night the high went up, okay, we just put a round figure across it, and $75. Okay, so on the same time period, starting from the 5th of June up to last night, which was the 28th July, that's about 1.5 months. All right, from $56 to $75, if you calculate mathematically, the ascension range is about 34%, 34 to 35%. So if you are comparing to the same period since the 5th of June, you would have bought one lot in spot gold prices and make 18% on a profit. But the same amount of money, if you have long in UGL, this ProShares 2 times gold ETF, you would have made 34 or 35%. That is about 2 times, okay, compared to 18%. And that is exactly what you would have done, all right, to double up your profit. So today we are here to talk everything about gold prices. Number one is how to estimate the top of the spot gold prices, which is going to be about 2020 to 2040 US dollars per ounce. And the second important point of this video today is, if you want to go on long in the spot gold prices, you could have or will in the near future start to go in again by tracking the UGL, because that will give you 2 times the profit on a good up run. All right, this is the DW World. Thank you for staying with us today, and I hope you enjoyed the video. Give us a like, all right, give us comments if you want to, and not forgetting the most important thing, leave a little finger, subscribe to us, and we hope we can bring more and better and informative video clips to share with all of you. Thank you very much, and DW World, I shall be back.